And I'll just make a quick intro here. So my name is Charlotte Parker. I'm part of the launch team for the Meng Impact Fund. I'm an MBA student about to graduate in a month, like a bunch of other folks here, and feel really lucky to be here on this day of this launch that has been 4 years in the making. Want to give a big thank you to the International Center for Finance at Yale, to the Impact Investing Club, and to all the individuals who have made this conference possible. I'm going to take 1 second and just make sure that I've got everyone's attention before I get into the good stuff. Awesome. So for all of us who've been involved in launching this fund for the last 4 years, this is a really exciting day, and our hope is that it's going to be more than a fund. So with that, we wanted to share our mission statement, which is hot off the press, before I introduce our panelists and a special virtual guest. So our mission statement for the Meng Impact Investing Fund. The Meng Impact Investing Fund will educate the next generation of impact leaders through hands-on experience investing in ventures that are critical for a more just and sustainable world. Our mission is threefold: deliver competitive financial returns, achieve measurable positive impact, and create an enduring community of impact-minded leaders. And so with that community in mind, we invite all of you to join us. We hope that as we talk through what we're doing on this panel, you're thinking about ways that you can get involved. We've also put QR codes around the reception, so as you mix and mingle and sip your wine in about an hour, we hope that you'll scan the code and sign up and see how you can get involved, whether that's in advisory capacity, as an entrepreneur, perhaps as someone who can share deal flow with the first year of deal team leads starting next year. So this panel comes from the Educate umbrella of that mission, and in a new and growing field, how might we all hone the skills to be better impact investors, whether we call ourselves impact investors or not? And what are those skills in the first place? So we have a really amazing range of panelists here. They're over here in the wings, and I'm going to ask them to wait until we get the video going. But just to give you a quick intro of all of them, we have Sheena Strawter-Anthony, who's Director of Impact Investment Strategy at the William Caspar Graustein Memorial Fund, and also a founder of an impact advisory firm. We have Margaret Bradley, who's Vice President of Strategic Initiatives at Ben Franklin Technology Partners in Philadelphia. We have Vinny Caruso, who is a Senior Associate at DBL Partners and a recent SOM alum who was part of the first year to get this idea going, so really great to have him back. And we have Elizabeth Baines, who's also on our launch team for the Meng Fund and will be joining the Yale Office of Investments when we graduate in just about a month. And moderating all of this, we have Professor Will Goetzmann, who has been a champion of the fund since its inception. So really great to have him here to kind of stitch it all together. And before they dive in, I also have the pleasure of introducing a virtual appearance from Mr. Leon Meng, whose donation made this fund possible just a few months ago. So if we could get that video up, we'll play it. It's a...
Jane Charles, Professor Goetzmann, distinguished speakers, ladies and gentlemen. Today, I'm very honored to join the 2023 Yale Impact Investing Conference. It has been my great pleasure to work with the faculty and students at Yale SOM to prepare for the launch of the Impact Investment Fund for the past few months. I know today is like a dream come true moment for many of us at Yale SOM who have been passionate about impact investing for many years and want to play a role in making the world a better place through mission-driven and community-focused investments. I take impact investments very close to my heart because I truly believe we are now at a crossroad when it comes to some big questions like climate change, social inequality, and economic imbalances all over the world. We're now also at a critical stage where the demand for impact investment has never been higher. At Yale SOM, from day one of the founding of the school's focus on public and private management, the faculty and students always try to make a difference and go beyond just making money, but also undertaking more social and public responsibilities. Through impact investments, we can put our money into good use and create more long-term, sustainable, positive impact for our world. We can help people who can help our communities. We all know there's much to do to address many pressing social and economic problems facing our world today. In Chinese, we have an old saying, A 1,000-mile journey begins now with a single step. 千里之行始于足下. Today, our students have taken their first step, and I look forward to hearing more progress about the new student-led fund at Yale and how we can work together to advocate more for impact investing. My firm, Ascendant Capital, and myself will continue to support our faculty and students alongside this journey of impact investing at Yale. Thank you again for having me to share some thoughts. I wish the 2023 Yale Impact Investing Conference a great success, and I do hope to see many old and new friends at Yale in person very soon. Thank you.
So with that, the journey of 1,000 steps, I'll ask our panelists to step onto the stage.
That was fun.
Well, I'm the moderator, and I'm thrilled to be here, and that was really an inspiring video, and it was wonderful also to hear the mission statement formally and the introduction to the fund. There's so much to talk about in terms of how the fund got started and what our hopes are for that. The other thing is, I'm really thrilled to be here with a panel of people that believe that finance is part of the solution to the problems of the world, or can be, and you're using finance in ways to help society, and in different ways in all the tracks that you all are taking. So anyway, that as it holds a special place in my heart as a finance professor, but also somebody that's interested in the role of finance in society. I'm going to get things started off. We're going to have some time for questions, but I'd like to focus first on the topic of this panel, which is about education, and that's what the fund is about. And I think I'm going to start with Vinny, because you were part of the original Fishbowl ventures. I think maybe we met each other pretty early on in the process, and it's so rewarding to see things come to fruition after a lot of work and thought and people to help along the way. So the question I would have is, how do you think this fund is going to make a difference to the SOM students that have come after you? You graduated in 2020, I believe. I was wondering what you maybe have, what you think this fund can help people learn, and maybe I'll also ask you to throw in something about what you've learned since SOM that people should hear about.
Yeah. Well, thank you, Will, and thank you for your support of the fund for so long. It's really exciting for me to be here and to see how far this initiative has come. And just to take everyone back to when this all started, it started with a conversation during orientation with my friend Alex Chen, who's actually here in the crowd as well. And we were thinking, we came to SOM to do impact investing, and really the only way to learn it is by doing it and having those opportunities. And SOM at that time didn't have a student fund. So I think in terms of the things that we think and we thought this fund could add to the education is, obviously SOM has great curriculum and professors that can teach about impact, but giving students the opportunity to sit. Oh, it's over here. All right, is that working?
Yes.
Yeah. Did anyone hear anything I just said? No. So I think what it can add in terms of giving students the experience to actually sit in an investment committee meeting and pitch a company and have the kind of weight of that decision of putting real money at risk to give opportunity to a real entrepreneur, and then have the opportunity to work with that company for years afterward. That student, as well as the students that come after them, can engage with that portfolio. And those are just experiences you can't get unless you work in the industry. And someone talked earlier about kind of a gap in terms of opportunity of, a first-time fund wants to raise capital, but often you need a track record. It's similar to get into impact investing, and opportunities like this can give students opportunities to build a track record of investing to say they've been there and done that when it comes to everything that an investor does day to day. And that's really valuable in the marketplace.
Yeah. Margaret, you're an SOM grad and also somebody that is involved in the venture side and looking for new ways of solving problems. And so I wonder what you think the fund, whether you think the fund has a potential to engage in the areas that you're particularly interested in.
Yeah. This fund, I think, is going to do exactly the kinds of things that we do in our work, and I agree. I'm in Philadelphia, so I've been a little bit bitter when a business school that's based in Philadelphia would always have us come out to judge competitions they have and can tout their fund. And I thought, why would Yale squander the lead it had in being about public and private management and being the perfect place for people like you all who are interested in this to come? And so I was so delighted that a fund like this exists so you can cut your teeth on it. So it isn't the student from the Philadelphia Business School that comes in and is the lead candidate when we're hiring next time. So I think the fund is perfectly relevant. And the delight for me in coming today and seeing the energy among Yale students and Columbia students, NYU students and others, and that the kinds of things that when we were here and got a master's in public and private management, which is still in language different than an MBA, but in intention now is the same. The idea that you are solving public problems with market discipline, and that for so many of these younger students, it just is part and parcel of what they're intending to do. So I don't know about you, but for me, coming in as like the old timer in this, it's just so satisfying to think that that becomes the norm going forward, because we need the resources of the whole continuum, from policy, as the energy folks were talking about, from policy all the way through to what the markets can do to make the kind of difference we need for the scale of problems that we've got to solve.
Now, you call yourself an old timer. That makes me an old timer.
I think any of us, I'm coming back for a 30th reunion, so I think any of us 30 and more are in a general shared old-timer category then.
But there really was an energy of in the early classes about business for society. Mm-hmm. And so this is just a perfect match, I think, with Yale's mission. We saw that from Leon Meng in his presentation, the kind of energy he had about
testimonial
this.
There, right.
Elizabeth, you are now headed, you come from working at Princeton Endowment, you're headed into the Yale Endowment. Those are very focused on one particular kind of impact. And so what do you think the possibilities are with this fund for kind of broad range of things that they might what are your hopes, actually, about the fund? That's what I'd like to hear from you, because you've been involved with this group, and so tell me more about what you hope to see.
Yeah, absolutely. I mean, it's been such an honor to build upon the legacy that Vinny and the original students, created when this idea came about. I think for us, I've been working on this for the 2 years that I've been at SOM, and I hope that when we come back in 10 years, this whole room is filled with people who've been involved with the fund in some way, whether that's fellow investors or entrepreneurs who've been able to benefit from our funds. I think this is, in so many ways, just the perfect vehicle for this school to actualize its mission. And also, I'm obviously passionate about higher education. I've chosen to stay in that field more generally, and I think Yale is a really phenomenal place for this to be happening, just given the amount of innovation that's happening right now. So very excited to see what we can do and sort of how that impact spreads throughout our community.
Sheena, in your, I'm not sure it was in your bio or not, but it was in your bio online about your attraction to the field that you're in because of the notion that finance could solve some, used responsibly, could solve some socioeconomic problems. I wonder if you could talk a little bit about how that has motivated you and day to day, what kind of work that takes you to.
Yeah. So I grew up in Lower Manhattan and was exposed to stark disparities of wealth. And when I came into finance, I was like, wow, so if folks knew how to manage their money, then, you know, we won't be poor. Like, this is great. As I got into the industry and the field, I started realizing that it's a little bit more complicated than that. And it's this question that I wrestle with a lot, is that finance investments has been a tool that has been used to extract and exploit communities for such a long time. How can you use it to counter all of that? However, in my heart, I do feel that if investors are more conscious of their investments, are more aware of the impact that their investments are having on our environment, on society, on communities, et cetera, then this can be a tool that can actually counteract the harm that has been done in the past. So hopefully I answered your question.
Yeah, sure. Can I ask you, this is a session about learning. Can I ask you if you can think of a circumstance where you've learned from the challenges of the multiple goals, really, that impact investing has. You know, we heard from the mission statement that there's a desire for market rates of return, but also for positive change, but also for education. That constellation of things is hard. It's not like just trying to increase shareholder value. I wonder if there's something that you have, some learning experience that you've had that you could share with us about
Wrestling with all those things, all the things.
Yeah.
So from an investment standpoint, like, you always have a strategy. You're always going to be invested in a diversified portfolio. You leveraging different asset classes, different interest rates, if it's bond, et cetera. Like, so when I'm looking at impact investing and I'm looking at a portfolio, particularly as I'm working on the Graustein Memorial Fund, I'm looking at how can I use all those tools to deliver an intentional impact. So there are going to be some market rate return investments, but there might be something that might be below market rate but have an impact. But that doesn't mean that 100% of the portfolio is going to be in the below market rate portfolio. It's going to be a diversified portfolio. And part of that education piece is understanding both. I do believe it's impact investment. So you have to understand the impact that you're having, but also investment strategy. How do asset classes move together? How are bonds and equity, public equity, private equity, et cetera, moving together? And then once you understand the investments piece, then you can go in and understand that impact piece, which is another layer. It's a lot of work, another layer of education, depending on the type of impact that you intend to. Are you looking at having a positive impact on the environment? That's a totally different lens than if you're looking at community impact, because then you actually want to know the communities that you're impacting, et cetera.
Margaret, could I ask you a similar question? Is there some learning moment that you could share with us about the challenges of impact and
Yeah, I've been thinking about this all day. I think this morning's sessions were great at getting to this. And there's always this conversation about what's concessionary return. But if the energy, sobering, sorry guys, but the energy panel tells us anything, it's all baked in anyhow. And so when we think about what market rate return is, we have to think about what the full cost of this is. And even, I would wish we had more time, even that, what's the cost of that in equity over time? And you guys are super bright. You don't only take accounting or finance or statistics, and even if you do, Ed Kaplan is one of the few who's still here from when I was here. When you're dealing with statistics, you're dealing with what's the full cost of a needle exchange program or any of these. And so I think the complexity, we talk a lot about this or that, but if we don't put the two of them together, we're fooling ourselves, because it's not a financial return that you can see in your office for your client and you don't see outside in the warm weather in the middle of January. I think we need some of the wisdom to come into how do we get those full costs figured into this, and then we'll stop thinking that there's a dichotomy between a financial market rate return and an impact.
That can lead us down into a road of full accounting in many dimensions, which is an interesting issue.
I didn't say that because it sounds geeky, but that's exactly what I'm saying.
Hey, we're in a school of management, so
but
it's okay.
Full cost accounting. How do you really understand the full costs and understand the full value?
Yeah,
exactly.
And the full opportunities too. Mm-hmm. You raise the dimensionality of things. You find opportunities to win-win opportunities.
Right.
Okay, there's another dimension to education, which is when you're on the when you're on the DBL side and you're talking to investors about investing in funds, that strikes me as something that requires a lot of teaching and explaining and interaction with with people that may not completely understand the idea of impact investing, or whether or not you even should be using that term for some clientele. So I wonder if you could share some ideas about that.
Yeah, it's a good question. I mean, the term impact investing has evolved so much over the years, and when DBL was founded 20 years ago, it didn't exist. So DBL stands for double bottom line, because at the time that was our effort to communicate we're not just looking for profit, we're looking for the set of companies that can achieve market rate returns on the one hand, but also meaningfully scale social and environmental impacts. And we set out believing there were a set of companies that could do both those things without sacrificing on the finance side. I think today that's much less controversial than it was back then. There are a lot of funds, whether they call themselves impact or not, and we heard from some on the last panel, that are bringing an impact lens to their investments. And a big reason for that is because that's where the opportunities are, that's where the world is going. Things like the energy transition just make sense from a pure business standpoint. So I think when it comes to using the term impact and explaining it, funds can decide whether or not they want to label themselves as impact. But to me, when you look at a fund's portfolio is really when you can understand, are they an impact fund or not? Because you can see the types of companies they're investing in, and whether they're bringing that lens to their investments becomes very clear. And what we're seeing, at least, is that more and more funds are both labeling themselves as impact, or they are investing and co-investing in deals with us that we consider impact deals. So I think that's just going to continue. And our thesis is eventually the term impact investing won't exist anymore. It'll just be investing. And I think we're seeing steps towards that, especially over the past 5-10 years.
What did you get most excited about when you joined DBL? I think many people in the room will know that Nancy Fund is a founder and an alum, and actually she came last year to speak to our EMBA colloquiums, and that was a treat to hear her talk a little bit about. But what surprised you about joining a fund after coming out of an MBA program?
Yeah, I was really excited to get the chance to learn from Nancy and Ira, others on the team that have just been doing this for so long. And before SOM, I was working in philanthropy, so a different side of the impact spectrum, pure grant funding, no expectation of a financial return, though obviously you're looking for an impact return there. But I think for me, it was kind of a shift in mindset to, I saw all of these opportunities in climate tech that I knew made sense for the world and could make a huge difference if that company were to scale, but really bringing the discipline and lens of, to succeed and to attract follow-on financing and to eventually get to a size where they could move the needle, these companies need to be able to stand on their own 2 feet and attract market rate investment and returns. So building that muscle of, sometimes having to make the really difficult decision to say no to a founder that has an awesome idea but just wouldn't have generated the type of returns our fund is looking for, and operating in our sphere of the full spectrum, if you want to look at it that way, was a big learning for me. And also just shined a light on how important every piece of that is, because there are really good opportunities that should be funded and do need below market rate seeking capital, and hopefully the amount of capital in that sphere is growing as well.
So there's a level of economic sustainability that comes with the market rate of return requirement or constraint.
Mm-hmm. Yeah.
So Elizabeth, tell us more about how you and your colleagues thought about the fund. Are you thinking about casting the net really broadly, globally, nationally, or focused on New Haven? I mean, how did you think through that, and what are the views that ultimately led to Charlotte's description of the mission and so forth?
Yeah, that's a great question, and it's basically what we've been spending every free hour of the last 2 years debating. I think one thing that was really important for us is that this be as inclusive an opportunity for any SOM student who is curious about exploring impact investing, whatever sector, in whatever way. I think what we envision is that next year when we bring on deal teams to start sourcing deals to invest in, we'll have upwards of 50 students able to touch these investments. And to me, I just think that's like a sixth of the entering class. That's a phenomenal opportunity. So keeping it broad, keeping it inclusive so that anyone who wants to, dip their feet into this field has the chance to do that. And because of that, we've sort of set out the preliminary sector focus to be quite broad. We're currently focusing on climate, healthcare, financial inclusion, and education, with the potential for that to develop over time. And so that's really been the ethos behind this, is to keep it broad, probably national to start with, and also with a very strong focus on how can we build connections in New Haven, not sort of explicitly focusing on New Haven, exclusively focusing on New Haven, but really building that into part of our sourcing community building efforts as well. And I'm sure next year when this conference happens, someone's going to say something completely different because everything will have changed. But we're hoping to build something that has some perpetuity to it and enables a degree of flexibility as student interest develops over time.
What kind of, what form of the investments, what form will they take? I mean, will there be some, will there publicly traded securities in this? Will there be direct investing? Well, like what? This is a huge range of things we think of as impact. So how have you thought about that?
Yeah, so this will be primarily early seed stage private investments in companies across those four sectors. So we're really going early. Our check size is likely to be between $25,000 and $75,000 per investment. So that's the scale that we're thinking of, a scale where we can have meaningful impact and sort of bring our talents to bear for the companies that we're working with. We will be restricted to being minority investors in those investments. So for anyone who wants to be a co-investor in the future with the Meng Fund, let us know. So that's sort of the scale that we're thinking of starting at, and then hopefully we'll grow from here. But excited to start to deploy capital, hopefully next fall.
More questions on this, because this is this is exciting. You say 50 students have an interest. How is it going to be organized so that you can have a decision-making process and prioritization? How do you assess the materiality of and so forth? What's the structure that it will take? That's
a great question, and conversations are still in development. But I think what we've imagined thus far is that we will have a CIO-like position, a co-CIO position, students who really take this on as their primary responsibility while they're here at SOM. And underneath them will be deal teams focused on those four sectors, led by one or two students who we excitedly selected last week. So a few of them are in the audience, and we're super excited to get going with them. And they will each have teams of 4 or 5 students. So that's how it will broadly be organized. And they will have a fair amount of autonomy to decide how they choose to source and diligence companies. There will also be a very substantial executive operational function supported by ICF. So we will have a full platform team, an education and training component to ensure that our deal teams have the sufficient resources to make good and intelligent investments, as well as a full operations team as well. So it's going to be a big enterprise. And then on top of that, we are hoping to engage a number of alums, interested members of the community. Again, we'd love to involve as many of you as possible in an advisory capacity, to have some kind of advisory committee to oversee and provide guidance along the way. And ultimately, investment decisions will have to be approved by an investment committee, which will be comprised of SOM alums within the impact investing space. So that's yet to be determined, but that's sort of all of the moving pieces. And again, it will likely change, but I think it's a good starting structure for us to work with.
Thanks for the plug for the ICF, International Center for Finance. So
Absolutely.
It's nice to have a back office
Absolutely.
coverage.
We appreciate the support.
Yeah. And I think Judy Chevalier, Professor Chevalier is going to be involved as a faculty, faculty partner in some way. So.
Yeah, she's been fantastic already. I think, it may have taken a while for this fund to get off the ground, but I think one thing we're super excited about is when SOM chooses to do something, they're going in, with full force. So we have full faculty support, ICF support, and so I think, we really have the chance to do something cool.
I don't know what time we're looking at, but I would like to see if let's have some questions from the audience. I know that all of you are going to be curious about this. So, and the light's a little bit difficult, but I see one hand up here. Yes, you have a light jacket.
And they have a microphone over there.
Yeah.
Thank you so much, all of you, and grateful to Mr. Meng for the kind contribution. Question mostly for Sheena and Margaret, but also interested in other perspectives. On the topic of learning, we've seen a lot of focus on participatory grant making recently. Interested to see how learnings from that can translate to the impact investing field, whether they're we can do participatory impact investing or really trying to learn from the communities we're seeking to serve, how you're approaching those questions.
So it's linked to impact investing, but not really. So I chuckle because in the philanthropy space, there's still this divide of the endowment and the grant-making activities. So on my side, I'm looking at the endowment. I'm looking at pure investments. I'm not even looking at program-related investments that offer concessionary rates. That's part of the grant-making piece. And then we have our grant-making team. However, I see the connection as, depending on the grants that are given, they can help build up organizations so that they can be at a state where I can start looking at as an investment for like market rate returns on the endowment side. So they're connected, but I think philanthropy still has a way to go to see that connection. And that's part of the education piece that goes with it.
It's interesting because once you announce that you're going to be an impact fund, then you cannot separate those two pieces. I mean, you can't say investments have one purpose for the endowment and have a different purpose for doing good. You have to put them together, which means all of us have to wear two hats if we're involved in something that says it's an impact.
Mm-hmm. Yeah.
I think there are two models I see most, and my organization has tremendous participation from the community in vetting deals, but not the way you're meaning about local community. We have a review process almost as complex as what you just laid out there, but where by the time we make an investment in a company, probably 40 sets of eyes have been on that because we use expertise from our community, in part to get the technical expertise, in part because we can't support these ourselves, and so if we get other investors' interest piqued, it's good for the companies. But there are two models. Last year, I'm part of something called Impact PHL that's tried to really build the impact movement from Philadelphia. And last year, the conference for that is May 1st and 2nd in Philadelphia, and it's going to be great if any of you want to come down for that too. But last year, someone from the Boston Impact Initiative and Ujima Project came to and was on this panel. And theirs is a complex model of engagement, but it's really one where as they refine it and figure it out, it's probably one of the best examples of participatory investment. A simpler version of it, I think, right now, and a much less personal engagement than that, is the extent to which some of these crowdfunding platforms are allowing participation for investments that in the past you had to be an accredited investor. You had to be someone of some means to be able to make those happen. And I think that's probably going to be what we see more than anything, because the level of effort that they've put into the work in Boston is something that just requires so much other subsidy. Even the little investments, we make small investments too. I don't know if McCall is still here, but spoke earlier with Bank of America. We just invested in her company. But if you do the math on what it costs to do all the due diligence on an investment and then to manage the investment over the course of 5 to 10 years, it's really hard if you put all full cost to make these make sense financially. So I think we're going to be turning to technology to find more ways and more participatory investment decisions.
Thanks so much. 2 quick questions. The first one's to Elizabeth. Do advisors get carry in the fund? Just kidding. But the second question is to Sheena, actually, because I think sometimes when we think about educating an impact investor, we think very naturally of sort of the next generation, right? We think of a lot of, but if we think about where the largest pools of capitals are and who's kind of controlling that money, it's actually generally individuals who are a lot older, right? So like endowment trustees and so on, CIOs. So I'm just curious from where you sit, like that kind of translator role and that, how do you educate an impact investor or how do you educate somebody who is, right, who has to be kind of brought along in that way? What are the unique challenges and opportunities when you're doing that translation from where you sit?
I think the challenge is that a lot of people don't think of an investment as having an impact. They only think of returns. They think in terms of performance. And I find my approach is, making people aware that all investments have an impact. Every action has a reaction. So every investment is going to have some type of impact on our society. So it's more of like being conscious of it. And then also trying not to put impact investing in this little bucket, but actually explaining these are ways that you can have an impact in the various different asset categories. So if you're invested in public equity, you can use your shareholder advocacy and vote proxies and things of that nature, and like really explaining how you can be conscious of your investments in different ways. From the generational piece, I find that the younger generation is like more motivated and passionate about this. It's just like common sense. Like they feel like this just needs to be done across the board. They don't see it as separately. They just see it as it's the thing to do. And the older generation, it's a change for them. It's thinking differently for them. And that's a challenge, and that's where the education comes into piece. And I see a card coming in, so I'm going to stop.
It's also, I bet in your work too, one of these issues where you've got to bust through some of the different gatekeepers, where financial advisors that don't have incentives to make this be more engaging. I'm inclined to stay away from impact language in general with foundations and endowments and just start figuring, do you bring your values to the table? And you're right, young people and women are more comfortable doing that than historically men have been with those. So some of it's about this intergenerational transfer, and let's get going.
So framing all investments in terms of awareness of all the dimensions that they have, good and bad. And so the way to do that, as you've described, is to prime the investor with the question about what their values are before getting into whether it's a 2% rate of return or a 10% rate of return is a strategy.
That is how we start. We start by talking about what matters to you and go from there. Because usually that's the way you can get past the conversation about what's market rate, what do I give up? It's what matters to me.
Yeah.
Yeah.
Elizabeth smiling because she's hearing echoes of our core course, the executive, where these are some of the tools that we're exploring with our first year class. And so she's a TA for this and hearing it's good feedback. You're really reinforcing the SOM curriculum here.
And you're going to be worlds different. I mean, Larry Summers, when he was president of Harvard, made very clear we will never let values get mixed up with what we do in investing, because their job is this and our job is that. And that Harvard has changed its mind too since then. So if Harvard can, a lot of us should.
Well, endowments have a very specific impact target, and both Yale and Princeton have done amazingly well. It's not clear that framing things as impact is the right way to go for endowments where they have a mission. But then both of those two endowments, and in general, large-scale endowments, are thinking about the how to align values and what things matter.
No, I think I mean, when I joined the Princeton Endowment many years ago, there was sort of an allergic reaction to a lot of talk around impact, and I do think that is changing, and a lot of it's just in the words that we use in the communication. I think, if you think about like the unique mission of an endowment to support these institutions into perpetuity, I don't know how you could do that without participating in the energy transition. That just, it seems to align very, very neatly with the time horizon of these institutions too. So I think there is a means by which we can alter our vocabulary and communication to get through to those core values. And new generation woman in endowment management, so I'll do my best.
Religious women did this so many years ago. You think that the universities can catch up. I mean, the sisters, the nuns were the early impact investors, inspired by moving their money as a result of apartheid and moving it into community investment. And they put their pension funds in 0%, 1% notes. So I bet you can figure it out.
Come back in 10 years.
I'll check back.
Well, we have some real superstars in the endowment world that are graduates of SOM.
Yeah.
So Paula Volent being the one that jumps to mind. Another question. Down here?
Or not.
Oh, up there. Sorry about this.
Do you want to
Hello?
say?
Hi. I have an observation and then a general question. So in one of the earlier panels, they were talking about sort of a democratization of leadership making decisions in the impact investing space. I'm not sure that's the right word. It was more about representation, because something like 6% were women, people of color. I don't remember the other category. But you guys all talk about sort of up here and the impacts and measuring them, but not much about who's impacting or who's impacted, what and how they can participate, I guess is my question. So Margaret just brought up crowdfunding. I'm trying to put together a project for affordable housing, for instance, and there are some models of allowing neighborhood residents to actually invest. And it's very complicated because of securities regulations, but it has been done. But I'm curious about where you guys sit, how you think about the people and populations that you're impacting. Like, how are they participating? And the measurements seem to come up from above instead of below. So I'm just curious about that, because it's very abstract in a lot of the conversations I've observed today as far as who is impacted and how you measure that and how they feel about it and whether they're invested as well. Thank you.
So Vinny, I'm going to toss this one to you.
Sure. So yeah, I can speak about that from our portfolio, how we measure our impact and who things are impacting. So from the very beginning, we've had a very robust system of measuring things that we can measure across every company, and then in addition to that, things that are very specific to certain sectors, because we're generalists and go across many sectors. But things like measuring the diversity of our founding teams, the diversity of the employees that are hired and at which level of the company, mobility from the entry-level positions up into leadership over time, thinking about benefits and whether everyone in the company is being paid a living wage for their geography. those are areas where there are robust methodologies, and you can apply that to any company. And we try to hold ourselves to high standards. The statistics were cited earlier, how bad venture capital has been about this in general. I think because we were lucky enough to have one of our managing partners and co-founders be a woman, we were able to attract a lot more female investors. Our most recent fund, over 50% of our founders were female. And we just think that that's a really strong example of if you get women into leadership and venture capital, the deal flow changes and the opportunities that you're seeing change. And so we look to see that trickle down not just from the leadership level, but also into the employee base and measure against national averages for a specific industry. How are we trending on a lot of these? And that makes a big difference because these employees at startups get equity in the company, and that's just opportunities to create really transformational wealth for a lot of populations through these companies, not just for the founders and the investors.
I also heard the question of sort of bottom up versus top down in terms of bottom up, how do we understand what problems need to be solved, or what do people want? And that that's a lot of, everybody's different. There are a lot of conversations. How do you kind of aggregate a mission without trying to do a lot of investigation first? That seems to be a challenge because once you start to scale things, you can't talk to everybody. So how do you think about that? Sheena, you probably are closest to that because of the foundation and the focus on equity, for example.
So I'm constantly thinking of the communities that are being impacted by our investments. If I actually think of the reason why my role was created and why I was brought to the Memorial Fund was that objective. A lot of times with investments, and I'll wrap this up really quickly, with this space, whether it's philanthropy, whether it's investment space, there isn't that much diversity and there isn't that many people close and connected to the community. So I love your question because it is a lot of the industry is high up here and not really thinking about the community. And my job is actually going into the community. So I'm constantly meeting with local stakeholders, trying to understand what's happening within the entrepreneurial space in New